Hey there, folks. So I'm actually recording this in the early evening of Saturday, and we'll be posting this Sunday. Hopefully the light holds up, but it's getting pretty dark out here. Let's get into it. The big question you and I have to answer is the American consumer about tapped out, right? The American consumer can cause a recession all by their lonesome, and it really seems to be that the American consumer might be tapped out. Again, we've heard from different retailers talking about buyers looking for discounts, looking for sales, things of that nature. We've heard from Target, Best Buy, Macy's. It does seem like the American consumer is just about tapped out. And again, they did spend in January and February. Again, retail sales up 1.7% in nominal terms, 1.1% inflation adjusted or real. But you and I have to believe that that can't continue, or at least I don't believe it can. In fact, Wells Fargo says the U.S. consumer has about 10 months, yes, folks, only 10 months of spending power left at current consumption rates. That's not good. Wells Fargo expects 3 more 25 basis points moves from the Fed, basically taking us through the summer. Again, as I said, we are getting Bernanke, right? 25, 25, 25. I think we have 2 locked in. I don't know that the third is a certainty just yet, but it is out there. Wells Fargo does say we cannot rule out a shock and awe moment from the Fed March 14th. Right, the next Fed meeting, Wells Fargo is saying that the Fed could shock and awe us, especially if the jobs number comes in hot this Friday. Again, shock and awe would be something I would welcome. I think, frankly, if we did 50 basis points in the next meeting, that might be enough, and they might be able to pause. But I think we will get 25, 25, and possibly 25 after that. The Fed's going to break something. The Fed is trying to break the back of inflation. But in so doing, will they break something else, right? Will they break the economy? Will they break the consumer? Will they break the debt markets? That is to be seen. Looks like Salesforce has been highlighted in a CNBC article about, and frankly, I want to highlight all cloud providers are at risk of losing customers. One of the things I did in my career is I ran sales teams and I ran go-to-market strategies. And something I would be doing big time in this crisis is I would be running takeout campaigns or consolidation plays. I would be creating havoc for my largest competitors, causing them to react and lose focus. It would be a really tough time to compete against a company that I was at, because I would cause other companies to have to waste precious resources keeping their install base while we would go and try to attack from various angles. Again, companies are going to consolidate. What do I mean by that? A company may have 15 SaaS products. By the end of this year, they will have 7 or 8. It's just how the system works. And again, something I would be doing is I would be going after my biggest competitors and try to take out their customers, convert them. Powell is speaking to Congress Tuesday and Wednesday. That is a big deal. He is going to say things like higher for longer. That's a no-brainer. But will he talk about a 50 basis points? He might bring it up. I think that's meaningful. Will he talk about being data dependent? Will he talk about no decision just yet? Will he talk about inflation being hotter than expected? What are the things that Powell is going to talk about in front of Congress? Because again, that's about 1 week until the Fed meeting, I believe. Again, for me, will he talk about 50 basis points is a big deal. Richmond Fed, Thomas Barkin, is coming out and saying he sees a scenario where the Fed is forced to go to 5.75. Now, that is higher than I anticipate, but even if we go to 5.75, that is a good thing. That's the terminal rate. That's the peak. What have I been asking for the last 6 months? Just rip the Band-Aid off. Get us to peak. Let us modulate. Let us just understand where we are so we can get to doing our thing. Why are rates up again over 7%? Because people just don't know. That's, Do a 50, be over, get it done. Let's go forward. In addition, Thomas Barkin says, I also see a possible path where inflation comes down faster than he expects. So again, Thomas Barkin is a hawk talking about 575, but he's also a dove saying, you know what? It's possible that inflation rolls over faster than I expect. Looks like China's growth target is out. China grew again, if you believe their numbers, which who could, but hey, it's a report. It's interesting, so we'll talk about it. Last year, China GDP grew at 3%. 3%. They are estimated to grow at 5% this year. I think 5% growth, meaning 2% more than last year for China, will be easy. They've essentially got rid of lockdowns, and I'm sure their consumers, just like the ones in the United States, will be revenge spending, going on services. We were obviously just in Southeast Asia, and the Chinese tourists were seemingly everywhere. Mary Daly, we talked about on the Daily Financial News yesterday that Mary Daly was speaking on Saturday at Princeton. She basically said higher for longer is the easy message. You and I have talked about it. What is hard, Mary says, is the speed of the journey. And I agree with that. Do we go shock and awe with 50, or do we Bernanke this thing 25, 25, 25? You should know by now what I think. I think we're going to get Bernanke. Neocash Kari is out saying the risk of under-tightening is greater than over-tightening. What is that code for? That is code for we know how to fix it if we break it. The risk of under-tightening means inflation sticks around longer. Neocash Kari is open to a 50 basis point move. Again, this is what I told you was coming. The Fed's going to talk tough and then I think wimp out. I hope they do 50. I have zero confidence they will. There was a very interesting article from CNBC Make It from Mike Winters. Full credit to Mike Winters. This is his list, not mine. It is the top 5 markets to buy a home in 2023. They looked at 179 markets: affordability, job growth, migration, supply. And I'll go backwards. Number 5, Greenville, South Carolina. Just so you know, median home price $335. Fayetteville, Missouri, $328 median price. Dallas, Fort Worth, $390K. Raleigh, North Carolina, $460K. And finally, Atlanta or Sandy Springs, $371. Again, top 5 markets. The report was actually the top 10. I chose to take the top 5. And then finally, read about a billionaire, Mark Mobius. Mark Mobius is an investor who's been in the emerging markets for well over the last decade, somebody I've read about for 20 years. I did find it very interesting that Mark is complaining about China. Apparently, Mark has a business account or a trading account in Shanghai, and he can't get his money out. Mark, you mean that a communist country can make up its own rules and not allow you to take your money out? I am shocked. I am shocked, folks. Be careful out there. Have fun. This is your daily financial news. Like, subscribe, comment. We usually do these live, except when I have a scheduling conflict with one of the millionaires that I bring to you 5 days a week. Again, like, subscribe, comment, be a part of the channel. Take care. Bye-bye.